Invest Africa, proudly brought to you by KPMG.
Welcome back to Invest Africa. If you've just joined us, we're bringing you some of the conversations from this year's World Economic Forum. Now, the CEO of the Johannesburg Stock Exchange, Nikki Newton-King, braved the snow in search of global opportunities in the global financial markets.
We've got to understand that there's a new norm out there, and it's a low growth, a highly volatile, uncertain global world. And South Africa competes in that global world, and we're connected from a financial market perspective there. So to the extent that there are good opportunities for investors in South Africa, they will come. To the extent that that is more interesting in the US or in the EU, they're going to go there. So I think we've got to concentrate on doing what we do really well. And then I think we will have a chance to participate in some of that capital flow.
Coming to a lot of economists as well, some of them are calling for a particular recession to take place in South Africa. The IMF as well has downgraded our growth forecast to 0.7%. Again, will this have a ripple effect onto our bourse?
We need a growing economy. We need to get inclusive growth. We have very big socioeconomic issues that we have to resolve, and we won't resolve them unless we have a higher growth rate in the country. I think there are opportunities indeed out of the fourth industrial revolution, out of harnessing tech, to be able to position us, leapfrog us essentially into a newer growth world. But it's going to take brave leadership. It's going to take tackling the real issues of change quite upfront, I think. And I think that that's a challenge that the forum is in fact putting to everybody, and why it's so interesting to be here as you listen to that same challenge being wrestled with by CEOs, politicians and policymakers around the world.
Mm-hmm. Having said that, the theme again for this year, you were very strong in today's panel at Brand South Africa, mentioning the fact that we do need to tap into the minds of young individuals. As representative of the JSE, how far have we come with regard to innovation and technology on our markets?
I don't think we've actually come close to harnessing it. The average age of my staff, for instance, is 38. The average age of South Africa, the minister was saying this morning, is 37. So, that's not, 27. There's actually there's a burgeoning body of youth who are not shackled by the ways we used to do things, and full of energy and full of creativity, and not worried about issues of privacy like somebody like me might be used to. So I think there is a lot of opportunity for us. Exactly how we harness it, I think we haven't yet begun to realize.
Speaking of the youth, I understand that you scheduled to have a meeting with the Minister in Higher Education, Minister Blade Nzimande, about maybe seeking partnerships with members of the private sector in order to assist with the cost of education in South Africa. How far have you come with that progress?
We haven't had a meeting with the ministry yet, but what education is critical to everything we do, and I think we've got to recognise that education has to be split not only by educating people in the very high-tech areas, but also in very highly skilled artisans. And I look forward to being able to engage with the ministry. The reality is that the public sector is extremely involved in education. All of us spend a lot of time working with higher education institutions, spend a lot of our philanthropy growth work in the education sector, and we're going to need more. We're going to need to bring more people with better skills into the industry if we're going to compete.
The Economic Freedom Fighters also hosted a march last year to your offices and had a set of demands. How far have you come in reaching some of their demands?
I don't think they really put the demands to us in the context of wanting us to meet them. More that there were 17 areas of focus that they said they would like attention on. And I think you and I would probably agree that those are in fact many of the correct areas of focus. We may disagree with regard to the pitch, but you can't disagree with broad-based ownership. One can't disagree with more education, with freer education. So there are a large proportion of what they are saying that I actually feel resonates very strongly with all of us as South Africans. The question is how we move together to make a difference.
Exactly. But we do understand the JSE is making strides in including and increasing participation, which probably brings us to new product launches and ongoing measures to get retail investors active on the market. What can we expect for 2016?
Well, in next week we're launching a beef contract as an example. Sure. So you'll be able to actually trade beef if you're a cattle farmer or if you're a butcher wanting to hedge your prices, as an example. There is no end to the innovation that we can do. We look at product innovation from a point of view of retail investors. One part is education, so how do you make that more interesting for youngsters to access, and we do a lot in that. One part is pricing, making sure we bring the prices down for retail, and one part is the sort of types of products people can trade, exchange traded funds, much smaller derivative contracts and the like, and you'll see lots more from us.
To close off with, we know that the JSE is a world-class example when it comes to capital markets. What about potential partnerships with our colleagues on the continent?
You know, we talk a lot to our colleagues on the continent. There are many exchanges, the 24 exchanges on the continent, and all of them are really agitated about how they can increase the level of their sophistication. It's taken us 127 years to be the competitive beast that we are today, and we're looking forward to seeing how our colleagues on the continent also become more competitive, more open. It requires clear leadership, it requires a clear idea of where you're going, and it requires execution, and I'm seeing those in all of our colleagues.
And that was Nikki Newton-King, the CEO of the Johannesburg Stock Exchange. Now, Nedbank is considered to be one of the leaders of the pack amongst the big four banks in South Africa. The bank CEO, Mike Brown, spoke candidly on the economic environment where the fight for market share takes place. Here are his views on the stormy markets, the weak rand, and the South African drought, amongst others.
Yes, I think your assessment is quite right. Global financial markets have had their worst start in probably 20 or 40 years. And in particular, emerging markets have been hardest hit. Concerns around slower growth in China, what does that mean for commodity prices, and concerns about rising interest rates in the US. So those have had, I guess, a particular impact in emerging markets. And in South Africa, on top of that, we've had the challenges of the drought that's going on in our country, as well as the challenges that we saw in our markets in December. So from our point of view, I think at Nedbank, I guess we were always expecting 2016 to be tough. It's probably going to be a little tougher than we had expected. So our current growth forecasts for the year are somewhere around about 0.3% from a GDP point of view. And if you look into what the financial markets are saying, they're saying we can expect inflation to rise and interest rates probably to go up somewhere around about over 1% during the course of the year. And what does that mean for financial institutions? Well, probably more than any other industry, financial institutions are a representation of the macroeconomic environment within which they operate. You can't escape the macro.
Yeah.
So it's going to be tougher to grow, but all of our financial institutions are in good shape. They're well capitalized, they're very liquid. So I think, in some stormy seas, our ships are in as good a shape as they've been in for the last 20 years.
Confidence in that we're not on the Titanic quite clearly. But talk to us a little bit more about the drought situation. Just how much exposure does Nedbank have to these agricultural sectors?
So I think in times like these, any sensible bankers combing through our agricultural books, combing through our commodity books, our exposure to agriculture is in fact relatively low. It's low single-digit percentages across our overall advances book. Mm-hmm. And agriculture in South Africa is actually, the problems are quite localized. So certainly from our point of view, we're going to look to work with the farmers, work through a season of drought with them, and hopefully, this is a long-term business that we're in. We're into supporting our clients over the long term.
I understand it's your 5th year in attendance here at the World Economic Forum in Davos. Why do you keep coming back, and what's changed in the conversations that you're having with your global peers?
So I keep coming back for a couple of reasons. Firstly, it's an unparalleled networking opportunity. There's nowhere else in the world that you can go and in 3 days meet as many people who you want to talk to or need to talk to. So it's a fantastic opportunity for that, both international people as well as South Africans who it's quite hard to get to see in our domestic environment. Then I also sort of think about it as an injection into your brain of some of the smartest people in the world talking about really interesting topics. So those are the two key reasons that I'm here. And I think if you look at how the conversation's evolved, certainly the first 3 or 4 years that I came here, the conversation was primarily around the global financial crisis, and as a consequence, banks and banking regulation. You almost couldn't go to a session without that being front of mind. I think more recently, and certainly now, the conversation's moved on, and right now conversations, certainly the centerpiece of the conversation is the fourth industrial revolution, which is much more about the impact of technology and digital solutions in the lives of our customers and in the world. But I think, front of mind for people here right now is growth rates in China, commodity prices, and oil in particular, and then as well as issues like the refugee crisis that the world is facing.
To piggyback off of the theme for this year, the fourth industrial revolution, how do we apply this within the African context, especially given the fact that different markets have different levels of financial inclusion, with South Africa potentially being the most advanced?
Yeah, so I think it's a wonderful opportunity for Africa. If you look at it from a South African point of view, clearly the key to be a winner in this fourth industrial revolution is bandwidth. So we really need to focus on making sure that we have cheap bandwidth for our population and education. Because if you don't have bandwidth and education, I think you run the risk of being left behind in the fourth industrial revolution. From a banking point of view, it's a wonderful opportunity for us. We're digitizing our businesses. From a Nedbank point of view, our app suite has won numerous awards. We've won awards last year in the big data environment for a product called Market Edge. So for us, this is exactly what we expected to happen, and we're excited about the future.
Fantastic. Mike Brown, thank you so much for your time today, sir. Just a quick question. How far are your rands getting you? I had to pay 80 rand for a bottle of cool drink last night.
Yeah, the rands don't get you very far right here. And I think, that's one of the challenges. It's the rand is very weak right now, and share prices are down as a consequence effectively of long bond curves going up, which means cost of equity has risen. So in any valuation model, share prices come down. But somewhere markets see this as a buying opportunity. The rand currently is about 30% undervalued on a purchasing power parity basis. So that's why your cool drinks cost you so much. And over long periods of time, the rand does pull back to purchasing power parity.
And that was Mike Brown, the CEO of Nedbank. That does bring us to the end of this episode focused on bringing you the big conversations from this year's annual World Economic Forum from Davos. Do join us same time next week, where we'll be in Botswana and we'll be exploring why the diamond-dependent market is now betting on innovation. Until next time, it's goodbye. Hello and welcome to Invest Africa. I'm Nozi Pombandra. Now, in this past week, we saw the world's business, government and civil society leaders converging in Davos for the annual World Economic Forum. The theme for this year's meeting was Mastering the Fourth Industrial Revolution. In this episode, we're going to be bringing you some of the conversations led by the South African and African delegations. And we start off these reflections with a catch-up with Trevor Hoole, CEO at KPMG South Africa, a newbie at the annual World Economic Forum. Trevor, thank you for making the time to chat to us. Now, you were in Davos this year, and I'm sure just recently back as well. Give us a sense of your overall impressions of Davos and whether this platform really spoke to the burning issues facing the world.
I was a newbie this year in Davos, my first time. I was really impressed. It is quite awe-inspiring to be there amongst so many powerful people from around the world, and to know that the US Vice President is down the road and that he's got a message to share. So overall, I think the mood is one of buoyancy. There's a great degree of optimism, and people generally make themselves available to talk and be heard. So it really is a wonderful platform for anybody to be there, whether you're a politician or a business person.
Right. And the theme, I think, this year was the fourth industrial revolution.
Yes.
How would you rate that in terms of its relevance to kind of the challenges that the world is facing right now?
Look, I think it's absolutely relevant. And there isn't a solution that one looks at these days which doesn't have a technology enabled end to it. And it's doing more with less. It's working smarter. It's taking data and analytics to a new level. And you think of where we are in Africa, for example, agriculture. Could we use data more effectively? I think of the story of Joseph. I don't know if you're familiar with Joseph and his dreams, where they predicted 7 years of famine after 7 years, of 7 good years, and how they planned for that. And so for me, it was very relevant, this whole question of the fourth industrial revolution.
I really love how you bring in the historical insights. And you've touched on Africa, which I think is very important. So having been to Davos a couple of times myself, I've seen how Africa's really been one of those high points of conversation. How would you describe how Africa was received? Did we have high visibility? Did we have an impact on the ground?
We certainly had an impact. I can't make the comparison that possibly you could as to how we've done previously. For me, it was more subdued than I'd hoped. And I think some of our thunder was possibly overtaken by the declining world markets, the China slowdown that achieved a lot of prominence. Our new Minister of Finance did exceptionally well. He opened the Brand South Africa session. He was also interviewed, and the mood around our financial stability. And, you know, as an investment destination, South Africa has obviously been top of many people's radars for many years. But the investor community wants confidence, they want certainty. And I think our minister was able to give that. So from that perspective, it was great.
So the South African delegation did a fantastic job of selling South Africa as an investment destination that continues to be a leader in Africa. Is this your sense behind the South African takeaway?
Absolutely. I mean, the governor of the Reserve Bank was also there. He was very impressive. I heard only favourable things about him and his interactions at a pretty senior level. There were a lot of senior South African bankers there who themselves had many interactions with their counterparts, and all the feedback I was getting was favourable. So I think South Africa had a great presence. But to be perfectly honest, I think it was a little more subdued than maybe you'd experienced in the past.
Were we talking from the same hymn sheet with other African markets? Because one of the criticisms that usually comes through is that we're disconnected and our voices aren't harmonized. Did you get a sense that this was done a little bit better this year, that there was a voice that says this is what Africa wants out of Davos?
To be perfectly honest, my exposure was more South African-led than African, although I was the only African KPMG partner there. So I was trying to carry the flag absolutely for the rest of Africa. And our West African counterparts and our East African counterparts, all of the entities that operate in those countries were also there. So we interchanged and interacted with those people. So I think Africa generally got its fair share of exposure under the circumstances, if I can say that.
And Trevor, as a final question, as a newbie, what were the most interesting insights that you walked away with from this year's annual meeting?
Well, apart from the really tight security and some of the comments which Joe Biden made about how wealth is concentrated in 62 people, I think 62, 63 people have more wealth than half of the entire rest of the world. So 3.5 billion people have less money than 62 individuals. It was quite startling, that for me. The educational challenges which we face in Africa, it was both encouraging on the one hand to see that even the United Kingdom has learning issues. Literacy amongst kids. The fact that we've still got so much room or so much ground to make up in that space. And then, of course, the unemployment question. If you're going to be doing more with less, if technology is really ramping up, what are you going to do with all the people that you don't need anymore? So if you're farming smarter, if you're mining smarter for us in Africa, how are we going to integrate that with our unemployment stats? And thereby education again becomes pivotal.
And that was Trevor Hoole, CEO of KPMG. Now, the team in Davos also caught up with the CEO of Brand South Africa, Kingsley Makubela, who had the tough job of selling South Africa Incorporated to the global community.
I wouldn't say at a difficult time, I would say at a challenging time. It really provokes me to come up with innovative ways to deal with all the challenges we're having as a country. So it's actually good that one comes at this time, because I think the challenges really, they strengthen one's resolve and they make one to think outside the box.
On that topic of thinking outside the box, to come back to the theme of WEF for 2016, it is understanding the fourth industrial revolution and how that ties in with South Africa's economies. Following on some of the themes from the panel discussion, what do you believe continues to work in favor of South Africa to position itself with regard to this theme and continue driving foreign direct investment into the country?
It was quite interesting to listen to our business people articulating exactly what we need to do as a country, to be innovative, that we needed really to start having an inclusive leadership. They were not saying the leadership of navigating through this fourth industrial revolution is primarily the responsibility of government. They took responsibility of some of these issues. And of course, the idea here is to grow the national pie, really grow our economy. We've just seen reports now that the IMF, it's predicting our growth to be less than 1%. So it's going to really challenge us to come up with innovative ways to grow our economy and create more jobs.
In the context of Brand Africa, just how far is Brand SA with regard to partnerships with our peers on the continent?
No, Brand South Africa, it's an integral part of Brand Africa, because whatever happens in the continent, it affects all of us. So we are really integrated, intertwined in that manner. And that's why we need to work together. We work a lot, very well with most of our partners around the continent. So the brand of the continent is very important, and there are heads of state who are coming from within the continent will be here today, and they will be strengthening the same message that Africa is the best way to do business.
And that was Kingsley Makubela, the CEO of Brand South Africa. Let's take a short break here in Johannesburg. When we come back, we're going to be bringing you conversations with the CEO of the Johannesburg Stock Exchange and the CEO of Nedbank.
Invest Africa, proudly brought to you by KPMG.